Desperate mortgage holders. Let's have a look. Hello everyone, Florian Heiser here and welcome to another episode of Heiser Says. I have my stein of coffee and I thought we'd have a look at this article from news.com.au regarding mortgage holders who may be a little desperate and advice or important steps they need to take. Because even with incredibly low interest rates, the fact that the economy has been locked down and ground to a halt may have an impact on a lot of people. So let's have a look at the advice that people are giving. And before we get into it, are you in this situation? What are you doing to manage your mortgage? Or are you ahead? Or have you paid it off or are not even worried? I know some viewers sold up and they're just renting now, and waiting to see what will happen. So, the important steps every home loan customer should take during the illness pandemic. Many borrowers are being forced to take urgent action on their home loans to ensure they are not paying too much during I'll call it the CCP pandemic. Many cash-strapped households looking for immediate ways to alleviate financial pressures have rushed to review their home loans. Despite the fact mortgage borrowing has never been cheaper, some interest rate deals are in the low 2% range. Tens of thousands of borrowers have already paused or dropped the amount they need to repay as a result of the illness pandemic. Well, I can appreciate that. I pay extra and then I always drop my minimum because I feel better making the extra payments, but I think that's more a psychological thing on my behalf. With the average mortgage now sitting at about $500,000 and the economic impacts of the illness continuing to spread, it's vital borrowers reassess their financial position. I mean, that's good advice. That's good advice, is to keep an eye on it, manage your finances. But, look at the number of people that are living hand to mouth. 500 grand ain't too bad, but how many people are higher than that? What are the arrears rates looking like, guys? This is the data, the chart I got from a while ago, from last year, just showing the growth in Western Australia and Northern Territory. And even in Queensland. 150 days late on your mortgage, everyone. That's a sign stuff's going wrong. And that'd be pretty stressful. That would be very stressful. ANZ Head of Home Loans, John Campbell, said a lot of people don't know what their options are right now. While banks are strongly advising customers to contact their bank to seek guidance, it's advised they do so through online channels to avoid lengthy waiting times on the phone. That's probably not a bad idea. I think I might touch base with the bank again and request a reduction. I tend to do that every quarter just for the sake of it. So, give me a discount or I'll talk to other people. We'll see, it's worked the last few times. I wonder if they'll do it now. Probably not. But I keep telling them, guys, you get the money for nothing. This is an asset for you. You should be paying me to have this mortgage. And they look at me funny. In recent weeks, call centres have been unable to keep up with the inundation of inquiries by concerned customers, so offset and redraw accounts. During the historical low interest rate periods, many borrowers have managed to scale ahead of their loans. Many have built up decent-sized chunk of cash in their offset accounts, a daily account linked to their home loan, or redraw accounts, where excess cash overpaid on the loan sits and can be drawn back at any time. Well, they want to keep you borrowing money. It's not the bank being nice. And one thing everyone has to realize is there's an all monies clause with the banks. So I've got my bank account, I've got my mortgage, I've got a credit card. The banks can just combine everything together at their will. They can take from one, put it the other, put it all together. They've got an all monies clause. There's other concerns with other agreements that you can have, other loans where there can be other all money clauses. So to keep an eye for it and get independent financial advice, guys. But it's not the banks being nice. It's all their money anyway. Remember, we're unsecured creditors to the bank if you've got savings. ANZ's Mr. Campbell said it was a good idea for borrowers to check up on what funds they had available because it could be an option to draw on these if they were facing financial difficulties. So, yesterday we were looking at ASIC threatening real estate agents who were suggesting giving advice, or not even, I wouldn't even say advice, just sharing information that people have the ability to draw their super, perhaps to pay rent. Now, my understanding was that the government was allowing people to have early access to that, or making it easier to have early access to that, to mitigate some of the issues that are cropping up and ensuring there's a home over your head. Wouldn't that be one of those issues? Wouldn't that alleviate people's stress? Not according to ASIC, slamming the real estate agents for sharing that information. Let me know what you think, guys. Do we need ASIC to take care of people? More paternal government hand-holding. You can tell I'm a bit frustrated with them ever since the responses I received trying to report a crypto scam that was an ASIC registered company. So, you should look at your internet banking. Look if you have any money in your offset or redraw account, he said. If you need to access that cash immediately, that is by far the quickest way to do it. I mean, is that something that needs to be said to people? Let me know in the comments, guys. Do people just... do they not check up on it? Do they not know what's going on in their own finances? Maybe. And my expectations unfair. You all hammered me when I suggested people need to have a few months of savings, even 2 weeks of savings. It's not fair. It's not fair. People, they're working poor. They have to spend their money on their smokes, guys. Their smokes. Latest Reserve Bank of Australia statistics showed borrowers are on average, and okay, smokes is unfair because that's an addiction. Honestly, smokes and sugar. More people are going to die from smokes and sugar, going pre-diabetic, and the horrible diet we have. It just still keeps going. Even the advice from the government is all rubbish. The food you get at the hospitals, it's not good for you. A lot of junk in it. And it'll update 10, 15 years once it works through the latest research that's being done. Once it works through into the health sector, it'll all change. People will reflect back and go, what the hell were they doing? Anyway, latest Reserve Bank of Australia statistics show borrowers are on average 2.5 years ahead of their mortgage repayments, including cash held in offset and redraw accounts. Well, there you go. There you go. So Australia is an indebted nation, but we do have a buffer. We do have a buffer. But could that also be because interest rates have just plunged to insane rates? Borrowers should be mindful, though, that if they take money out of their redraw facility, it will push the total amount owing on their loan. Yeah, of course. I mean, do people not understand these? Well, no, they probably don't understand these basic finances. And if money is withdrawn from a redraw account, it will also push up the total interest paid on the debt. So minimum repayments. Since June last year, the RBA has cut the cash rate 5 times. Let's bring up that chart, guys. There you go. There you go. Everything's fine in the economy. The RBA is managing it like a well-tuned machine. They've greased up the engine. They've added a nice synthetic oil. It runs a lot better than the older stuff. They got rid of the old stuff, put the synthetic in there, and it's humming along. Sure, there's a bit of sputtering, fires coming out the top, and some of the cogs have fallen off, but it's a finely tuned machine, guys. The RBA know exactly what they're doing. It's science. It's science. Keynesian economics is wonderful. This MMT is going to just save Australia. We'll just print to the ends of the earth, guys. Sure, it's never worked before in the entire history of humanity, but this time it's going to be different because it's even more complex. So it'll take longer for the people to wake up. How long, you reckon? 1 generation? So this has also resulted in falls to both fixed and variable home loans. Yes, it has. Some banks, including ANZ, have kept customers who are on variable rate loans repayments at a higher level. This means when rates have fallen, their repayments have stayed at the same level, which has allowed them to scale ahead of their mortgages. Mr. Campbell said for borrowers looking to free up some more cash, dropping their regular repayments down to the minimum repayment could be worth considering. Have a look at what you're paying today, what the minimum repayment amount is, and if you want to borrow that amount down to the minimum, that's another option available to you. This seems like very simplistic advice. And in some ways this scares me. This really scares me if this is new to people. And if this advice is new to you and you're listening to this, it means that you need to spend a bit more time getting control of your financial situation, getting an understanding of the loans that you have, and managing it. You're in charge. The banks can change. You can request these changes, these minimum changes, all the time. You get a bit more money, chuck it on there, put the minimum repayment down, get a bit more, chuck it on there. It doesn't matter if your minimum repayments are going down, if you're throwing more and more on it. It depends on your type of mortgage. I should suggest talking to your broker to make sure. Because I know if you're on a fixed rate, some mortgages limit how much extra you can pay off. So it's something to get some specialist advice and get control of it. Because otherwise, this all seems like really basic advice. A lot of people aren't aware they're paying more than they used to. It's a good thing to be paying more than you should, especially at times like this, when it creates a bit of a buffer. Mr. Campbell said ANZ had received calls from many thousands of customers who had opted to reduce their payment to the minimum repayment. So, people are doing that. Financial institutions are now offering customers anywhere from 3 to 6 months deferrals on their mortgage repayments if they're impacted by the illness. The Australian Banking Association Chief Executive Officer Anna Bligh said they're starting to get hundreds of thousands of calls to do this. But remember, it's not free money. You're just paying for it longer. That's the thing. If they gave you a 3 to 6 month interest-free period, that would be impressive. That would be impressive. For those mortgage holders who are worried today, if you lose your job, you've had your hours cut, if you're having any of these impacts to make it harder to pay your mortgage, there's relief available, taking away the weight of worry of loan repayments off your shoulders, she said. If banks can take this off their shoulders, it helps them make the idea of hibernation not only possible but affordable. But be aware, while repayments are paused during this period, the interest charges are not. See, so the banks they're extending your loan, guys. They're going to make more money out of this. They want to keep you indebted. They want to keep you indentured to them, essentially. You're working on their house farm. You're working to pay their asset off that they're making money off. So this is a good thing for them, to keep you in bondage to them a little bit longer. A little bit longer. It's just, our version of what is it? Outer Limit? Outer Limits? I can't. That new game that's like a space version of Fallout, but much better. They will add on to the loan balance once repayments restart. It can either be paid off over the remaining duration of the loan, or the loan period could be extended. There you go. And here we're looking at some comparison rates. So interest rates. Home loan mortgage rates have never been cheaper, and financial comparison website Rate City's spokeswoman, Sally Tyndale, said borrowers are in the driver's seat when it comes to rates. The world may be in financial turmoil, but banks are still willing to negotiate with variable rate customers who have a good track record at meeting their mortgage repayments, especially if they think you might take your business elsewhere, she said. Before you call, check what your bank is offering new customers for the same home loan, but also find out what other lenders are likely to offer you. She said this will give you some ammunition to negotiate with your bank. According to Rate City's database, the cheapest owner-occupier variable home loan rate on offer is Well Home Loans at just 2.09%. The cheapest 3-year fixed rate deals are with Homestart Finance and reduced home loans at just 2.44. But Ms. Tyndall warned borrowers to be careful before fixing their home loan. Fixed home loans are usually a lot less flexible, often with limits on extra repayments, no offset accounts, and costly fees if you try to break your loan before the fixed period comes to an end, she said. Exactly. So you need to talk to an independent person. Remember, If you go to a broker, some of them have to meet certain requirements to sign up so many loans with a particular bank, so there's a potential there for a conflict of interest. I was talking to one broker who doesn't do anything with CommBank because they require a certain number signed up through them every month. And he goes, well, that's a conflict of interest. I need to provide the best loans for my customer. So keep that in mind as well, guys. Keep that in mind as well. So what do you think? What do you think? Do you think this advice is something that's new to a lot of people? Or the fact that so many people are offsetting their payments and getting desperate, is that a concern? But the good sign is that people are 2.5 years ahead on their repayments. So you could just hold off for 2.5 years. Or maybe everyone is just so bloody worried, you want to get rid of it. We've all had enough. Australia's had enough of this debt slavery. I know I have. We're living quite frugal. And, I'm sure a lot of other people are as well. But worryingly, a lot of people look like they're in trouble. Anyway, guys, thank you all for watching. Let me know your thoughts and opinions in the comments below. Please like, share, and subscribe. If you're a fan of the channel and you want to help us produce content, there are a few ways you can. You can join the channel here on YouTube or on Patreon for a small monthly fee. You can support the channel by using our affiliate links at Amazon or eBay for your consumer purchases, or using our affiliate links at Independent Reserve or KuCoin for the crypto traders out there. We have merch available from Heiser Says or Teespring. We've got Gold Pass if you want to donate gold to us. And finally, PayPal if you want to make a donation that way. Thank you to everyone who's helping support the channel. Have a great time, guys, and I will see you all in the next video. Bye for now.